Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our fundamental video analysis segment. So let's begin by looking at the equity markets. They started the day on the upside, boosted by this optimism that short selling is going to be banned over in France. The initiative was started over in Asia. A couple of days ago, this was the major talk among traders that short selling can perhaps stem the massive sell-off that we've seen. How big the sell-off has been? Let's look at the performance of the Dow Jones and how it closed yesterday. It went down by 3,000 points, something which we haven't witnessed in the history of Dow Jones trading. Overall, the US equity market faced one of its biggest sell-offs since 1987. The over 1,000-point move for the Dow Jones has become very normal. Now the question, of course, is where are the opportunities in this particular market? Now, given the fact that the US market closed lower last night, but the futures started to trade higher and then hit the limit high, and the European markets also started the day on the positive note, but that momentum is fading, it is highly likely when the cash market or the US equity market opens, it is going to be opening to the downside. So that juice is still in this trade if you wanted to trade it. Meaning, I think that upward bounce, the dead cat bounce that we've seen, it isn't really lasting. Secondly, in the commodity space, gold is still, it dropped back below the level of 1,500. And I think it is likely that it is going to continue to move to the downside and test that support which we mentioned in our technical analysis video. By the way, it sits at 1444, but then there is another critical one. In crypto space, I'm really waiting for Bitcoin to touch or fall below the level of 4,000, because anything below 4,000 represents a huge opportunity for investors, not for traders, for investors, because the risk to reward ratio becomes incredibly attractive given the fact that you are still targeting that 10,000 mark. For me, I'm still holding on to my Bitcoin assets until it touches 100,000 at least. So I don't even care about that 10,000 mark. But I think from that perspective, it is great. From trading perspective, again, a huge sell-off. We got to see that massive momentum to the downside. Only then that retracement trade becomes really nice and juicy. Otherwise, I think if that doesn't happen, the rally could continue and it could challenge that 200-day moving average if the price stays above the 5,000 mark. In the currency market, we have sterling, which is trading at 1.21. Extensive sell-off that we have seen so far because UK has failed to implement all the necessary measures, and investors are saying that we still have a lot of bad news to feed into the UK's economy. Now remember, next week we are also going to see the Bank of England's monetary policy decision, and if the Bank of England cuts the interest rate again, by the way, they've already done a 50 basis point, but because the Fed did it, and then they did it again by 100 basis point, the pressure is on the Bank of England that they may cut the interest rate again, right? But we don't know. It's not fully priced in. Then sterling dollar is likely to fall again, and it could fall and touch or kiss the level of 1.19, a level which we haven't seen all the way till the Brexit day. It was on that particular day that the currency fell at such a level. But if you are looking from a longer term perspective, I think the massive sell-off is really calling for that retracement trade, for that a little bit of an upward move or a dead cat bounce, and that can happen anytime. So I think from that perspective, the upward side looks really attractive because there has been so much extensive sell-off. The final one is your VIX index, which is highly attractive for me. Why? Sitting at $80 right now. The financial crisis high was $10, so my resistance is between 80 and 90. That's my resistance zone. It has already entered into that zone, and I think I'm very excited for this particular trade to work because I think there's a huge room to the downside. I also anticipate that a cohesive response is imminent from governments around the globe, just like how we have witnessed the amplified reaction from central banks with respect to their monetary policies. That's all for today. See you guys tomorrow.